Welcome back. So the picture across Asia is looking good. Still got a 6% gain on the Japanese market. Hong Kong's up about 2.5%. Taiwan still lower. But the implied open will come up, and that's, of course, suggesting that we will start positive. Maybe about a 400-point uptick last we checked. Let's see if it's still intact. Yes, 430-odd points. That's the rise we are expecting. Of course, we'll watch out for the overall market recovery, but there are several stocks based on news flow as well that should be on our radar. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning. Still going through a lot of those Q4 updates. Mangalam, morning. How does Titan's update look?
Well, Titan's update is steady. The reason why I say it's steady is because, on Titan's base, a standalone revenue growth of 25% is fairly strong. And even if you look at, the segments, the jewelry business growing at 25%. If you look at watches, that grew at around 22% as well. Eye care growing at 19% is fairly positive. CaratLane, however, along with emerging businesses, slowed down when it came to growth rate. Domestic jewelry business growing at 24% on the back of a significant increase in gold prices is something that the street was bracing itself for, and that's come in. Gold jewelry showed a revenue growth of 27%, and gold coins itself grew by 65%. But there are some concerns. The biggest concern is sluggish consumer demand led to single-digit buyer growth. Secondly, the studded jewelry registered just low double-digit value growth, which implies that the studded ratio has worsened further. That may impact margins. And finally, the emerging businesses, in that Taneira has actually seen a decline of 4% in sales, along with CaratLane itself growing at a lower clip than its earlier CAGR. So I expect the stock to see mild green on the back of 25% revenue growth, but may see some profit taking, as the street would like some more details after the numbers come by.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Sudarshan. He's here to tell us about the biggest talking point towards the end of trade, the OMCs. We have some clarity now, Sudarshan. Tell us more. Two pieces of news, both on that excise duty and on the LPG side as well. Please go ahead.
Good morning, Nigel. So government has made 3 announcements yesterday, and if you look at those announcements might look positive. So first announcement, government has announced an increase of ₹2 per litre in special additional excise duty for fuel, that is petrol and diesel. And second, it has announced an increase of ₹50 per cylinder for cylinder price, and it's for both Ujjwala and non-Ujjwala cylinder. And third, government to pay LPG compensation, that is for FY25 and also for ongoing losses. So these announcements might look positive, but if you dig deep, these announcements are not that positive. Now coming on excise duty, why the government has increased in excise duty? So basically LPG compensation for FY25 was at least 41,338 crore. By this increase of excise duty, one will think that now this will pass on to consumers and retail fuel price might increase, but that is not the case. This excise duty hike will be borne by OMC. So basically, government is taking through excise duty hike and paying via LPG compensation. But also in LPG compensation payment, there is a catch. Normally, till now, whenever government used to announce LPG compensation, it used to go into special fund. But in this case, through excise duty, it will go into exchequer fund. After that, finance ministry or government will take a call how much needs to be released for LPG compensation. Now, the second part about the LPG hike that government has announced of rupees 50. It will not be used to pay the dues of FY25. It will be used to make the payment for ongoing losses. So as of FY25, calculations suggest that per cylinder, OMCs were making losses up to ₹250. It was in the range of 220 to 250. Now, after 50 rupees hike, that loss will come down to ₹200 per cylinder. Now, there is another case. In yesterday's announcement, Oil Minister also made, if oil price remains in the range of 60 to 65 or even it goes up to 68, there is a headroom for OMCs to cut price. So this risk will also prevail. Lastly, what do brokerages say? HSBC says it maintains buy on oil marketing companies, but it has cut target multiples due to increased risk perception. And CLSA believes Oil Minister's comments raises the chances of a cut in retail price. So considering all the factors, I'm going with red for OMCs, but do keep it in mind, market sentiment is positive.
It's just too tough, right, as a space. Always has been too tough to for specialists. For specialists, it's okay, and there are lots of people who do that. But otherwise, I mean, there are too many variables. So just one thing I wanted to ask you, in all the notes that you've read, right, you said people have cut price. Are analysts now assuming that they will compensate companies for some of the LPG losses? Is there a hope now?
There is a hope, but they are not sure about that because, as I mentioned, that considering it's going to exchequers, they are not sure about that. But they are going by the words of Oil Minister that because he has given the assurance, so they are going by the words.
Yeah, no, absolutely. You know, government is strengthening its balance sheet, and you know, it could use some of that to repay some of the losses. But basically, it's the government which is collecting the money. So thanks very much. Godrej Properties and Sobha are the next two that we want to focus on. Vinny is here with details. Vinny, morning.
Good morning. So both these real estate developers have given their Q4 update. Now, Sobha, when you look at it, it's been a weak set of numbers that's come in terms of Q4. And overall, when you're looking at it at the first look, sales value is up 32% quarter-on-quarter basis, 22% on a year-on-year basis. Highest ever launches that they've made, highest ever average realizations that they're talking about. But what the concern comes in, that they've missed the guidance. The company had given a booking value guidance, which is of achieving that 6,644 crores, which was last year the same booking value guidance that they'd spoken about. Now they've missed that guidance, and that is the concern coming in on that front, that missing the guidance is not something exciting because the company themselves was expecting a bit more. Now that's why a red that for Sobha developers is what we're looking out for. On the flip side, Godrej Properties, when you look at it, good Q4 update is what they've given. In terms of booking value, 87% growth on a quarter-on-quarter basis, year-on-year basis 7% growth, and they have achieved their booking value guidance. They'd spoken about 27,000 crores as a booking value guidance. They've achieved somewhere around 29,444 crores as booking value. So above guidance in terms of that, as well as a growth of 31% in terms of booking value, is something that is interesting for the company, and green is expected for Godrej Properties.
Okay, so Godrej Properties perhaps looking better than Sobha because of that miss. Got it. Vinny, thank you very much. We've got Vamakshi joining in. She's rounding up a bunch of other stocks that are worth keeping on the radar today. Vamakshi, good morning.
Good morning, Surbhi. Let's first start off with BEL. The company has secured a major contract worth 2,210 crores from the Ministry of Defence. This is for the supply of electronic warfare suits for Indian Air Force's Mi-17 V5 helicopters. Keep in mind that this is a spillover contract which ideally should have been received in FY25 itself. Now going forward, analysts see very strong ordering momentum ahead given the ongoing modernization drive and expansion of fleet size across Air Force, Navy as well as the Army. Bodes well for the company, going with the green for this counter. Apart from that, keep an eye out on PN Gadgil as well. The stock will be in focus on the back of its Q4 update, going with the red because consolidated revenue saw an increase of only 5.1%. This is much weaker as compared to the kind of growth that some of its peers have posted. The retail segment grew by 50% on a year-on-year basis. The company reported a same-store sales growth of 26.3% in the fourth quarter. The studded ratio was at 7.4%, with the sales increasing by almost 31%. Global Healthcare is the next counter we're watching out for, going with the green for this one as well, and that is because the company has received an offer from the Assam Electricity Grid Corporation to acquire 3 acres in Guwahati to set up a super specialty hospital. Now this bodes well for the company because generally such a deal comes at a lower price as compared to the fair market value of the land parcel, so bodes well for the company. Lastly, keep an eye out on Nuvama. Sources to Money Control say that PAG has picked JP Morgan and Morgan Stanley as advisors for sale of a majority stake in the company. PAG, through some of its other companies, owns nearly 54.93% in Nuvama, putting its stake, the value of its stake at almost 10,580 crores. The timing of the deal is not yet known. It depends on how the market conditions pan out. But sources further add that rival PE firms focused on financial services and who have the ability to cut big checks could be contenders for acquiring this stake. So given that development, going with the green for this counter.
Okay, all right, Vamakshi, thank you very much for that. In fact, let's